What's going on, guys? Benzinga coming at you via Market Find Benzinga. Just wanted to give you the market outlook via the options. Last week we were able to get a lot of good downside moves via the markets. First time in a long time that we've actually had a really nice pullback. We had a move from 168 to 164. Overall volatility had jacked up as expected. On this downward move, you pretty much could just buy outright puts and it would have worked out fine. The best trades of the week were pretty much Google, Priceline, and basket trades via the financials. When you see a big complex move like this, it is really important for you to just stick to those big names that you know are going to have the biggest moves on those days. Obviously this entails a little bit of tape reading, a little bit of timing, but these are the big juicy moves that you really want to catch. And if you're kind of sitting around writing for 2 or 3 months, this is the big move that you can get just by buying outright puts or buying outright calls for the breakdown and breakout, to where you can actually make a big chunk of change. We were able to snag $500,000 out of it. Very, very happy with that. In terms of the follow through, this is the main important thing to understand about options, is that they're only going to give you one really nice day to catch that move, because again, market makers, they're going to spread wider and wider on your options because it's actually the real move. They don't want to get run over on their positions. Okay? Options market makers cannot actually take positions. They need to always stay delta neutral, meaning that you guys have the best chance of making money on those days. But what you have to be careful of is that the follow through. All right, you've got a lot of retailers that wanted to chase the trade, they wanted to continue adding short, even possibly bouncing for a long play, which did not work out in their favor. Thursday and Friday, we had this pure consolidation that really trapped a lot of retail traders. So again, you have to think more in terms of institutional money. After losing money on a big down day like that, what you're going to do is that you're going to see a lot of compression in prices. A lot of institutions are going to be writing options pretty much to trap those that are trying to chase the move too late. So again, guys, make sure you pay attention to the type of movement that's coming along, read the tape, and be careful of how the options are actually going to move. This week, we're really going to pay attention to see if we're going to get any squeeze type of action. We're already gapping up today a good 150 points on the Dow, and it looks like we are going to squeeze. This action pretty much could be very, very dangerous for options traders. If we start ranging back and forth between 164 and 168, it's really going to be a problem. You're going to have to only select the right horse that is best for you to trade. In other words, what we're going to do most likely is probably going to write on the outsides, wait till we get a little bit more calm compression in terms of consolidation for the SPYs, financials, and the techs, and then we're going to go at it again with another big move. Again, guys, it's Benzinga coming at you via Market Find Benzinga. Over and out.